Do you want to learn how to catch trades like this using SMT divergence from ICT? Well, stick around. Hey, what is going on, guys? Edward here, back with another video. And yes, this time I'm making actually a part 2 of SMT divergence from ICT. I've been going through a lot of these videos recently and just watching and trying to understand how this whole thing works. And he uses USD index with the GBP USD. He also uses Nasdaq with S&P 500 in order to spot this sort of SMT divergence. Now, SMT actually means smart money technique. I want to call it a smart money trap, because it is a manipulation. It is a trap, basically. And divergence, we are actually used to spot divergence using either MACD indicators, right, or RSI indicators. I was used to. And this is something that I was not aware of, that you can actually spot divergence also between indices, or as I mentioned, between certain even pairs. So if you want to learn more, I recommend you watching this particular video, right, from ICT directly. And just let me know what you think in the comment section. If you actually like this type of strategy, it's really cool. It's a really good strategy. It does work pretty much in every time frame, and I will show you. I will actually start with the 1 hour time frame, and I will be using S&P 500 and Nasdaq to spot this SMT divergence, and I will show you how you can get in. Okay, now I'm not gonna lie, his videos, sometimes they last like 50 minutes, 60 minutes, but it's very complex. The way he explains it's complex. I'm not gonna lie, it's not simple, it's not easy to understand. I had to go through a lot of videos to sort of digest. What I'm doing right now is I'm trying to digest this thing for you, so making it simple and easy to understand. That's basically what I'm going to try here. I hope I can actually help you understand it. All right. If not, maybe you can actually go ahead and watch his videos. So let's get it. Let's start right now. As I mentioned, I am on a 1 hour time frame. I'm going to be splitting the screen in half right now. You don't need to split it in half or have these two windows. You don't have to. It's just I want to use it just for the video, for the purpose of this video, so you can see things clearly. But you can just literally just be switching between those two charts, between Nasdaq and S&P, right? So right here, we're actually simultaneously, we're at the same hour right here, the same time. Okay, so since I'm on a 1 hour, right? Now, what I can clearly see is that below this, hold on, this low right here, okay, this low is this low, right? So I'm just waiting at this point, I'm waiting for a price to start doing its thing. You see the price actually is pushing up, and we're seeing on S&P all of a sudden a failure, like it went a little lower and it broke that previous low, right? But Nasdaq has not broken it yet. What it's doing is actually creating a high so far. I mean, at least at the moment, it's creating a higher high. And S&P recently created a lower. I'm sorry, not a higher high, a higher low, right? And this is a low and another lower low. In this case, it created a first lower low. So it's going to the downside right here, and right here it's actually going to the upside. So for those who know and who has maybe traded divergences before on using the RSI, you guys know that you have to compare and see the RSI if it's also creating higher lows or so you can spot the divergence, right? But in this case, we're going to combine. So if Nasdaq in this case is creating a higher low, and right here is creating a lower low on S&P, we have a potential divergence, right? Market has swept this previous low right here. We have a potential SMT. Have SMT right there. Okay. Now, price from there, let's see what is going to do. We have to spot a couple of things. Okay. When you spot the divergence at the bottom, it means we're buying. And when you spot the divergence at the top, it means we're selling. So in this case, we are trying to look for buys. But before we go into a buy, we have to spot a couple more things, okay? Which is what? He calls it displacement, okay? Which is equals um, just aggressive buy, sell, aggressive buy or sell, okay? Like that, let's call it like that, all right? So that's basically it, what displacement means. We want to see, after spotting the divergence in the SMT, right? We want to see a huge move to the upside. We want to see big candles, big injection of money right there. So look at what's happening right here. In the next few candles, we have a huge impulse, right? The market is actually pushing up. We have one, two, three candles going to the upside. And the next thing we have to spot is a fair value gap, because that's where we are going to be placing our entry, okay, at the fair value gap. So right here, what do we see? We have we have a fair value gap right here. This is a whole zone, right? We have a fair value gap right here. We have another fair value gap right here. And we have another fair value gap right here, okay? So at the moment, we have three moves, three candles, closing, boom, 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 one after another. So you can mark pretty much this entire zone according to ICT. He covers that entire, well, he basically trades this one. You could be placing, since you have a fair value gap right here, you could be placing your entry if you want. You could be placing your entry right here. This is your stop loss, right? And maybe take profit 1 to 2. Okay, just an example, right? You could be placing it there. Not all the time the price will come all the way down to the first fair value gap that it was formed. Okay, so what he does instead, he covers the entire zone. He covers that if there's there are three fair value gaps right there, he's gonna take the last one that was formed right there. Let's see anyways if the price actually keeps pushing from there, maybe creating another fair value gap. Now price is pulling back, mitigating the zone. From there, it goes a little lower and start pushing up. Okay, but you see, it activated our entry. Let's see on Nasdaq, what do we have? Okay, because we're also trying to look for buys on Nasdaq. It keeps pushing, similar. Okay, very similar to the move they did. You see that we have a fair value gap right here. We also have another fair value gap right here, and we have another. We had actually another one right there that it was formed. So what he does, he literally just take that entire move. So he places his buy right there. He places a buy limit order and a stop loss just below that low. And again, take profit could be 1 to 2, or if you want to aim to the next buy side liquidity, I mean, that's fine. It's just at least somewhere there. Anyways, okay. So, and with this one as well, with S&P, it's pretty much the same thing. So if you're aiming for that 1 to 2, we'll see what the price is doing. Price actually did pull back a little deeper. And then from there, okay, we're seeing the price actually pumping up. At this point, you should definitely be on break even. If we're aiming for a 1 to 2, this would have been a smash already, 1 to 2. Or if you want to be a little bit more greedy and ambitious, you want to go all the way to the top, okay, you can do it. Right here, price started pushing up, pull back a little deeper, and then pretty much did the same move. So there you go. But you see that here, I'm doing this on a 1 hour time frame. You can do it in any time frame. I'm going to try now to jump in on maybe on the 5 minute time frame. I'll give you more examples. But you see that it doesn't matter the time frame. You can go higher time frames, lower time frames, scalping. You want to do swing trades, because this actual trade would take you 2 days and 4 hours, 2 days and 1 hour. So you see, so this is sort of a swing trade right there, because I'm on a 1 hour. Now, if you want to catch a scalp, okay, well, you can actually go in the 5 minute, 15 minute, and you can actually get out on the same day. So I hope it makes sense. Let me go ahead and actually show you clean this thing, and I'll show you some examples now on the 5 minute time frame. All right, now that we're here on 5 minute time frame, Nasdaq and S&P 500, we see that the market has created a low right here, right? This last low, and this is last low on S&P 500, right? So let's go ahead and play, and we see that that break, let me go here, is rejecting. So at Nasdaq is rejecting to break this low. It's actually creating a higher low right there. But when we go in S&P just broke that low, right? So we're starting to have a divergence. We're starting to show that divergence. So where can we enter? Okay, remember the rules. We have to spot a displacement or aggressive buy. In this case, we're trying to look for a buy. And we want to see the displacement to the upside. Okay, as a matter of fact, you know what? Let's go ahead and switch it. Let's go invert, and let's go invert. So we can actually give the example now as the sale, as we are actually selling. So you can see it on the top anyways. So you can see it's the same thing. It applies to the buys and to the sales. So right here, we want to see is big displacement in this case to the downside so we can go selling, okay? So let's go ahead and watch the next candle. Boom. You see that huge displacement, and you see that first fair value gap that it was formed right there. Nice fair value gap. Okay, at that very moment, you can actually place your sell limit. Oh, I'm sorry. I'm gonna go selling. Ah, yeah, I know what's going on. Let's see. I'm gonna go this way. All right. So this is the stop, and my take profit, as I mentioned, I can go 1 to 2, or if you want to aim the next sell side liquidity, which is going to be somewhere there. Let's see what S&P did. All right, we're starting to show a fair value gap. We have to wait for the next candle. The next candle does not leave a gap right there. The next candle actually filled that entire gap. So I'm not placing any position just yet. I have to see the fair value gap to the downside. In this case, I want to sell. Looks like price is coming back up. Watch out for there. Watch out for that position because sometimes market can just continue pushing up. Well, let's see what's going to happen. All right, we're starting to have again another selling pressure right there, another displacement. We wait for the fair value gap to be formed. Okay, we have the first fair value gap formed. From here, guys, I'm explaining you this. From here, you can mark it up already. You have another fair value gap forming right there. That candle just recently closed. Okay, watch out for that. I'll explain what you can do. I'm gonna wait for the next candle to form. But at this point, if you want, you could be placing your position already. Your sell limit order right there. The stop goes right there, and the take profit if you want to aim this low. I mean, that's fine. We'll go for at least a 1 to 2. Okay, but we have formed the first fair value gap right here. I know the candle, this one right there, it already left one fair value gap, but we have to wait for the next candle to be formed. So the next candle, what it does is just goes down again to the downside. What we're going to do is what normally ICT does is now he switches, he puts now this fair value gap, and this is going to be his entry right there. Okay, so waits for the candle. Okay, filling. Okay, so this probably is going to be the valid one now at this point. The sell limit order has been activated. Boom. You see, got mitigated, and from there it went down. Okay, so you see what happened. If I go on Nasdaq now, let's see what the market does. Price pulls back. You see, it sort of mitigated our fair value gap, and then from there, price continue going to the downside. So, guys, this strategy happens all the time, every single day, and every single time frame as well. You can use, of course. Remember, if you go on higher time frames, you're gonna require more patience. If you go in lower time frames, those are the time frames that I normally recommend because you actually get in and out right quick. It's you're scalping, and you don't need to be waiting for such a long time. All right, So, I mean, it's up to you. Every trader is different. If you like scalping, you're like swing trading, this strategy will work, right? As long as you're spotting the divergence and the SMT is very important. Just make sure to watch this video a couple of times. Let me know if you found this easy, because it's literally it. I can just continue looking and searching and make this video a 10-hour long, and all the examples are pretty much be looking exactly the same. So you can watch ICT videos in there based on SMT divergence and see what you think. If you like, if you want to use it, just let me know what you think in the comment section below. Subscribe if you're new on the channel. It helps me, it motivates me to keep posting, to keep posting content for you guys regularly. And I'll see you guys in the next one. All right, take it easy, guys.